We don't know which way it's going, but you can trade this market now. You certainly have room and volatility if you were looking for it. And now we get to Todd Sohn, Senior ETF Technical Strategist, Strategas Securities, a Baird company. Good afternoon to you. What do you think about this market move today?
This is a fun one to call, and I apologize I'm not down there with you in person. Hindsight obviously helps. We've seen the market really lift off here in the last 30 minutes or so. But going into this, we had a really interesting setup. The emotional part of this correction really took hold. You had a record amount of inverse ETF volume. You had a major spike in put volume. You had a massive amount of negative 2 standard deviation alerts for stocks to the downside. So I think we got a little overcooked. And now, especially when you are looking for tactical lows in, we arguably in a bear market, that you can get these surges higher. The question is, okay, is there follow through over the coming days? You have great breadth today so far through to 10 p.m. or so. Now, how much more can the market carry us higher, or is this just some sort of short covering bounce? That remains to be seen what the sustainability of this rally is.
Yeah, I mean, earlier today we heard from the president through, I think it was on Truth Social, that he wrote, "Be cool, the U.S. is going to be the biggest, the best, etc. Don't be afraid to buy," I think he even said something like that. In the meantime, he basically was showing his belief in his ability to keep this going and not to crush America. I don't know what happens next, but I will say people are feeling pretty good here. Tell me more about the ETF market. What are you expecting now, and what do you want us to definitely know? Because tech has been out of favor. ETFs, people generally love ETFs. What do you expect now in the quarter ahead, or what is definitely on your agenda right now?
Yeah, tech is a very interesting scenario here, right? Flows were all in on tech for the majority of 2023 and a good chunk of 2024. And as tech has finally taken a back seat in terms of leadership, you've seen investors acknowledge that it's not the same tech sector as it was early in this cycle. So we've seen outflows from tech ETFs. We've seen a large chunk of outflows from semiconductor related ETFs. And so I wonder if the market's going to go through a kind of first in, first out scenario here. Semiconductors and home builders were among the first groups to peak last year and meaningfully correct. You've had a washout from ETF flows, which is helpful from a contrarian perspective. So you wonder if you can start taking a nibble here at some of the semiconductor ETFs, whether it's SOXX, SMH, SOXQ and whatnot, and ride it for a little ride higher here. But the more I see outflows from tech, the more constructive I can get on some of the passive indices, just because investors have moved on from that, right? And they're starting to skew towards some of the defensive areas like utilities. That's a helpful reset in terms of psychology of the market, in terms of sentiment overall.
And so at this point now, the ETF market and the billions that go into it on the annual basis, do you expect that this year could be a monumental year?
Oh, yeah. I mean, we're on a record pace. I think it's interesting that you've still seen flows into equity ETFs despite a roughly 20% drawdown from peak to trough over the last 6 weeks. A lot of long-term ETF investors are not deterred by the headlines, which is a good thing for the long run, right? You want to stay invested for the long run. And you're still seeing money go into levered long products, which is still reflective of the buy the dip mentality. Now, I like that some of those assets have evaporated here a little bit. It's kind of a necessary evil to erase the fraud that was in the market. But the ETF industry overall is still booming. We're over 4,000 products, $10 trillion in assets. Active management is here. That's going to be important going forward, especially given these volatile markets, whether it's in fixed income or equity. So I'm still very bullish on the broader ETF market. We're going to continue to look at the flows for hints on sector sentiment and broader market sentiment too.
How did you think that maybe the ETFs did with inflows and outflows on Thursday, Friday, Monday, Tuesday? Did you find that people were pulling out during those, most tumultuous times, or were they going in and saying, "Hey, I see these stocks are down 10%, I want in"? Any way to tell just yet?
Yeah, so what was interesting in our work is you saw a massive amount of money go to T-bill ETFs, really short-term, short-duration cash-like ETFs, BIL, SGOV, stuff like that. And that's reflective of the more tactical money getting very nervous about the market. We like when we see surges into those products. It's a reflective of fear and anxiety in the market. So now we have this rally up 10%. That's part of that reflection, along with the surge to inverse ETFs. Broader picture, you still saw money go into broader ETFs, right? S&P 500, the passive stuff, those continue to take in money, whether it's just automated investments from paychecks going in every week. It's great for ETFs, but I also think you look at some of the corners where the T-bill ETFs, the inverse volume, the VIX funds, right, that are out there, they were taken in cash, which was reflective of the immense amount of fear from this correction. So there are definitely hints that we were getting very overcooked and to look for this rally, along with just passive money that always comes in no matter what the environment is, which is really impressive. It's just hard to beat getting the S&P or broader U.S. equities for basically free from an ETF.
And I'll say, as I wrap it up, I mean, when you look at the sell-off and people were like, oh, we're oversold, but technically, if you look at this, but the thing was different. It was different than last August. It was different than COVID. It was different than, the recession, the Great Recession, in that you had the tariffs and lack of clarity. And so you couldn't just say, oh, well, now we have a double bottom, or you know what I mean? Like you couldn't do just technical analysis because you're a headline-driven market, and fundamentally, we were not secure into what really is ahead. Todd Sohn, it's great to see you, and I think folks are probably pretty happy today as they're seeing somewhat of a comeback here. Thank you, Todd Sohn.
You too, Nicole.
Great to
Thank
see
you.
Of Strategas. Thank you, a Baird company.